Today I'd like to take a moment to educate you on something called a biweekly payment. I get this call quite often, and right after we close a transaction, you'll be solicited or you get something either from the bank or an outside service soliciting you to do a biweekly payment. I'll often get the call, how do I feel about it? Is it a good thing or a bad thing? I don't believe in the biweekly payment. I understand the principles of it, of what you're looking at to go through and do, pay your house off quicker, pay it off sooner. All that makes complete sense, but I want to show you why I would advise you not to do this. I'll show you a quick graph right here that shows basically what happens when you do it based on a $200,000 house at 4% on a 30-year fixed. I'm only going to use a principal and interest payment, not including tax and insurance, just for this graph and this graph only. So basically at 4% on a 30-year fix, your payment would be $957 principal and interest only. And you pay 12 payments per year. Under a bi-weekly payment schedule at that same interest rate, a 30-year fix, you'd be paying a payment of $478.50 every 2 weeks. So at paying 26 payments per year, you're paying one full extra payment per year. But what happens when you get into this situation? There's the fees to set it up, and every time they take a payment out, they're charging you $3 each time they take it out. So just in cost in the life of the loan, it would be $2,356. You're also twice as likely to have an accidental late, meaning something got lost in the mail or something gets messed up at the bank, or anything can go through and happen to cause a late where banks make extra money when that happens. So the system's basically designed for you to need the bank again down the road to come back and need money, either to put the new roof on or do other things. So if you're ever going to pay off a house early, you want to make sure you have your other stuff set before that happens. You want to make sure you have 6 months worth of savings, a safety net. You want to make sure all credit card or personal debt is paid off in full. You want to make sure your near future, kids' college funds or anything else are fully vested. And last but not least, your personal future retirement funds are all fully vested. A smarter thing to go through and do, in my belief system, is set that money aside. So basically what you're doing is you're paying $957 extra that year. So if you divide that out over a month with the cost and fees, it's about $80 a month that you'd be able to set aside. So if you set aside $80 a month and just making a meager 5% interest on that money through an investment, you'd be able to put away in that 27-year time period approximately $25,920 based on that $200,000 loan. Your interest you'd earn at 5% over those 27 years would be approximately $28,962. So your final balance at the end would be $54,882. Now if you wish at the end to pay your house off early, use that cash to pay it off. But now it's liquid too, you can actually physically get to it. What we witness all the time in the lending industry is people come back to us and say, I need a new roof, I need to put my kids through school, I need to go through and borrow money again, and they're starting their loan all over again, which is defeating exactly what you're trying to accomplish on a bi-weekly payment. Hopefully this has helped you, and if you have any further questions, always feel free to give myself a call or anyone in my office. I love to go through and help you with these type of questions and make sure I'm pointing you in the right direction going forward. Anyone else you know that's in the same situation to make this decision, please pass this video on and help them with making their decision. I look forward to talking to you soon. Thank you.